Philippine markets this Thursday. The Philippine Stock Exchange opens today lower by 0.2% to 6,537. The stock market closed yesterday, Wednesday, lower by 0.2%, though still managing above the 6,500 mark. Let's take a look at the Philippine peso. It opened slightly stronger at 55.80 to the dollar. Peso closed yesterday a tad weaker at 55.855 against the greenback. Our next guest came on this show last February talking to us about the typical pickup in condo sales in an election year. And today, we check back on property consultancy firm Colliers Philippines on what the just concluded midterm elections meant for condo sales. With us now is Research Director Joey Bondoc. So good to see you again. Joey, welcome back to the program.
Yes, good morning, Kathy.
Right, yeah, I remember that conversation from February, and then I said, I'll have you back at the end of the midterm elections and see whether there had really been a pickup, the usual pickup in condo sales whenever there's an election exercise, whether it be presidential or midterm. How did it go then?
Well, unfortunately, Kathy, it has not improved. When you talk about condominium take-up in Metro Manila, so right now, we still have a sizable number of unsold, ready for occupancy units in the capital region. But what's positive, Kathy, is that the demand outside of Metro Manila has really been bullish. And we're looking at the Central Luzon, Calabarzon, Cebu, Davao, Bacolod, Iloilo. These are cities, localities that continue to record very strong take-up, especially for the horizontal developments, house and lot only. In Cavite, for example, one of the most expensive is at about 51,000 pesos per square meter. About what, 10, 17 million pesos per unit, almost sold out already.
So if and when we compare the previous election years with this one, it appears that the demand and the buying really happened outside of Metro Manila.
Correct.
So that is what makes this unique.
That's right.
What about Metro Manila, though? I mean, what's keeping buyers
from
picking up
I think one of the
ready for occupancy condos?
Well, one of the major reasons really, Kathy, is the elevated mortgage rate at this point. So you have the central bank cutting interest rates, right? Because inflation is tempering. But the average bank mortgage rate is still at 7.7%. It has not really gone down. And
is it a matter of time before it comes down, or?
I think so.
Because rates are coming off.
We perhaps need to look at the second, third, fourth quarter of this year before we see substantial reduction in bank mortgages. So that has really been resulting in elevated prices of condominium. Yields right now very low, 3%. So if you are an investor and if you want to achieve a very good yield, it doesn't make sense at this point, and therefore resulting in a very slow take-up of condominium units. But again, what has been offsetting that is the shift to suburbia. You know, developers really taking advantage of the strong demand outside of the capital region.
So can I take it then that the purchases were made outright cash? Because if interest rates were a problem, then they wouldn't even buy anything outside and in suburbia.
I think, Kathy, what will really help the Metro Manila condominium market recover over the next few years are the RFO, ready for occupancy promos, being offered by developers. Right now, you don't even have to pay a hefty cash out for you to be able to move in to a ready for occupancy completed condominium unit. Essentially, you're just leasing for what? 36 months. And then after that 36th month, 60% of what you paid can already be deducted from your total payment of that condominium unit. Some developers up to 120 months. You just have to lease it essentially. Some developers offering up to 50% reduction if you pay cash. You have other developers even allowing monthly lease of their condominiums in Boracay. So if you want to work from Boracay, that's a very good prospect if you're a digital nomad.
It wouldn't be called work. It would be called beach, beach holiday from Boracay. But talk to us about the senatorial lineup, because definitely there will be an impact in the way policies go. In your assessment and how the new constitution of the Senate will look like, what kinds of policies might drive down that oversupply? What would help?
Well,
and is that something that's needed in the short term?
That's correct.
Given the political issues as well between parties, of
Yeah,
course, that they'd have to
yeah.
deal with.
Well, if you really just look at the political situation right now and just focus on the legislation needed by the property market, you have, for example, the Right of Way Act amendments. I remember the first ROW Act was passed during the time of President Aquino. That was 2016. And we believe that this is up for amendments. We have major projects. In Metro Manila, you have Subway, for example. You have MRT-7. We are hearing reports that there are delays in their completion. Subway, delayed by 4 years already. 2028, pushed back to 2032. And what's interesting here is, and a little concerning, is that right-of-way is getting in the way of major infrastructure implementation. We believe that this is a measure that will help stoke demand. Why? Because we always say that infrastructure will help raise land and property prices. They will help dictate the strategies of developers. And this is very timely because developers have been shifting to suburbia. And the implementation of these infrastructure projects, airports, subways, railways, will definitely help guide developers. Where should they invest? Where should they land bank? And where should they develop condominiums or house and lot projects?
The move to suburbia also speaks loads about where people want to work.
That's correct.
Has that already shifted in the manner that's affecting the vacancies that we're still seeing in the office market?
Well, if you look at Metro Manila, Kathy, as we reported, it's almost 20%, 19.7%. We still have
It's
about...
still high.
That
As
is
you can
correct.
Take a look at
It's
that
still
graph. It's really been trending higher.
Yeah, and again, we're projecting a 22% vacancy by the end of 2025. But this is mainly because of supply-driven increase in vacancy. What's interesting is that a lot of companies are still occupying office space. They are now transferring and looking for higher quality office spaces. And it is what we call, the shift, the move to quality, higher quality office spaces being offered at a discount. There's an interesting survey that we had during our previous briefings. Majority of our respondents saying they are more effective when they work in a traditional office setup, and majority of our clients, respondents, now implementing 100% return to office. So that's a very interesting...
Was that survey according to employers or employees? Because
Both
you're going to get...
Actually, both employers and employees. Our
Maybe the sentiment of employees wanting a little bit of hybrid, right?
That's correct. But that's pretty interesting because, if you really redesign your office space, it will really entice more employees to return to office. We have a new office space in Makati, and it really encourages us to report to office.
Right. Well,
we have these refreshed spaces.
As you say, refreshed, we're happy in the studio. And I thank you for joining us.
Thank you,
One of the
Kathy,
initial guests that we have here in the refurbished setup, Joey Bondoc of Colliers, Philippines, joining us.